What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. In the Weekly Watchlist, I do a technical analysis and give you some of my thoughts on the tickers here on the left. We have the broad market comprised of SPY, the Qs, and IWM. After that, we look at some companies. It's going to be Apple, Netflix, Tesla, Alibaba, Facebook, Nvidia, Microsoft, and Amazon. A couple quick notes I have written down here. The market is going to close early at 1 p.m. on the 24th, Christmas Eve, and then completely closed on Christmas Day. So something to keep in mind is that the volume may be light and the markets might be choppy, just considering that people are not in front of the screens and are enjoying time with the family, as you should be. New Year's Day, we're also going to be closed. That's January 1st. That'll be the following week. As always, if you're interested in receiving 5 to 10 swing trade ideas, then go ahead and sign up for the free newsletter. That's the first link in the description, and we send that out every Sunday afternoon. Also, below that link, you'll see we're on Instagram. You can follow us there for a daily swing scan and some tidbit of technical information in the afternoon. Also, if you want to chat with myself and other traders in real time, go ahead and join the Discord chat, and we'd love to see you in there. Without further ado, let's start with the broad market. Alrighty, starting off on our SPY weekly chart, as always, you can see that we do have a bit of an indecision candle here. Although the body still is green and it's skewed mostly to the upper range of the candle, you can see we do have a small tail on top and a larger tail below. So what that means to me is, that the market is still advancing. We did have a nice pullback and tagged up, if you will. We can see that better on the daily. But overall, market is still moving in the upward trend in general. You can see, we're getting a bit overextended here. I wouldn't be surprised if we follow through to the end of the year and then see some sort of pullback when everyone gets back into the market, the week after New Year's. So once the big money comes back in, people are settled back into their jobs, ready for the winter, we might see some sort of pullback. But for right now, I certainly would expect the market to just sort of dribble higher and, continue in the upwards direction through the end of the year. Alrighty, so zooming into our daily chart, you can see this is sort of the reason why on the weekly chart we have that topping tail. It's predominantly based on Friday's action where we set a new all-time high, so we'll mark that one in there. That's at 321.97. Nailed it. So we got that. You can see we do have a key support right down here below, so we're going to get rid of this one since they're so close. This one's certainly more important. You can see these 2 times here, 3, and then another touch on Friday. So 319.48 is a very key support. Anything lower than that, and I would expect the market to come back down to 315.46, 315.50 if we're just going to play a nice round number there. So that is our next support below. We do have some gaps still remaining. This one is still it has been partially filled, as you can see by this little pullback, but still not completely filled. This is another gap. We still have a a gap here, and then if you scroll way back, you can see we still have the glaring gap in the chart from way back here. So a few gaps are now stacking. If you watch Peter's pre-market perspective and his Sunday videos, then you will know that we also have many virgin points of control below us, which are potential targets on any sort of break to the downside. So keep those areas in mind. On the way up, again, $1.5 into blue sky territories. I think that's kind of where we're headed with the end of the year and just finishing strong, with very low volume. I wouldn't be surprised if it's just choppy into the end of the new year, slightly up. One thing to note on the impeachment and news, the market didn't really care, it seems. The market went higher, even though there was some news about Trump's impeachment and whatnot. So something to keep in mind is that always could affect the market. We do have our levels mapped out for us, though, and we are prepared. So the Qs would have an even nicer weekly bar, but we're not going to look at it. We do have a topping inverted hammer candle here all the way up at a new all-time high, so we're going to mark that in. That's 212.50 just about, so that's something to keep in mind. If we do head back in the upwards direction, we've got to break that, and then it's $1.5 into blue sky territories. We have a partially filled gap below us. The gap fill happens all the way at the high of this candle, which is at 210.93. Something to keep in mind if the market sees a quick snap to the downside there this upcoming Monday. We don't quite have that nice horizontal support here, but there is some support somewhere around 209.25 just based on some of these lows. It's not as clear as SPY, but there is a level somewhere in there. Also, we have this gap fill, which will happen at 207.87, another partial gap fill in here. And then if you scroll way back, we do have our gap similar to SPY on the Qs way back here as well. So still some poor structure here on the Qs, just in the market overall. So something to keep in mind. A good target to the downside is if this gap fills and it continues to fall, 207.87 is going to be our first support. Anything lower than that, we really want to see this 206.05 hold, which was this previous high, resistance, and then support on this day here. IWM is doing fantastic. We zoom the chart out just a bit. You can see that we're just still not quite all the way up at our new all-time highs like we are in the rest of the indexes, but we are chugging along quite nicely up to that area. So if we zoom back in, you can see the moves have been quite nice. Some consolidation. There are still some gaps below. This isn't quite a gap fill here, so there is a small gap that remains unfilled in the chart here. And then if we look back even further, it doesn't look like there are too many actually. So we're in pretty good shape. There's a small gap here, which looks like it's remained partially filled as well. It's not perfect, but so a few things, 2 gaps there. We are still moving in the upwards direction. I think there's still a lot of room for it to run all the way up to that 169, 170-ish level that we've been talking about for quite some time. You know, if we finish strong into the end of the year, there could, who knows, this could just explode up into that resistance level. And then, as we talked about going into the new year, once the big money comes back in, we might see some pullback off of that level. So something to keep in mind. All these charts are going to get cleaned up for the new year, so all these lines won't be as confusing. We can definitely get rid of some of them, so watch out for that in the next video. If you're enjoying the analysis so far, be sure to hit that thumbs up button. I genuinely would appreciate it. I'm pretty sure the YouTube algorithm would as well. One thing I do want to point out about Thinkorswim, I kind of just realized it, is there's no calendar gadget here. I was looking, there's a calculator, there's your dashboard, all these things, but there is no calendar, and I think it would be super awesome if there was a calendar in here, just so I could be, aware of what days are falling where on the week and so on and so forth. So Thinkorswim, if you're watching this, get a calendar gadget. Without further ado, though, we're going to hop into our companies, as always, starting off with Apple. We do see a nice bull flag that's forming here. So some of these levels, again, we're going to clean up the charts for the new year, but we do have a resistance level up here right at the high pretty much. That's at 282.65 right there, and then some support right here at 278.67. I think whether it breaks out to the upside, we see a nice continuation from this bull flag. If we see a breakdown, then we're looking for a gap fill to happen here, which is from essentially the gap fill happens when price gets down to 275.30, which is the top of this green candle here. The gap is remaining right there in the chart. So if we see a breakdown, look for that fill to 275, what did I say it was? 275.30. If we see the breakout, look for continuation in a similar fashion to what we've been seeing over the course of the past couple weeks. You can see it happened here. Sideways, nice 3-day breakout. Sideways balance. I wouldn't be surprised to see a nice 3-day breakout again on Apple. Netflix has been an absolute monster. I haven't really been watching it throughout the week, been super busy, but we got the breakout over this trend line, it looks like, and from here, it's just really charged straight up. We saw a little resistance at the 200 SMA on the daily. No surprise there. That's a first touch resistance, as we teach in the trade brigade mentality. After that, we are going up straight to our next resistance point here at 338.12. I'm really curious actually to see what's going to happen here. There's a large gap above that could potentially be filled. You see that we tried to partially fill it here, couldn't get all the way there. The gap fill happens all the way at the low of this candle at 361.75. That's quite a ways for price to still go. Let's just draw a price level in there just so we're reminded of where that gap fill happens. Somewhere in that area, you can see that's still a nice ways away. So if the market remains bullish into the end of the year, if Netflix can continue to keep its momentum, although it is starting to get a little overextended in my opinion, if we can keep that, see some consolidation and then see a nice breakout again, the full gap fill may be a potential there. I'm not saying it will happen, but maybe a partial gap fill. Either way, I think it does need to consolidate. We are quite overextended over the course of the last, 5-6 days, straight up green. There are some gaps that remain slightly filled below. You can see there's one here on the breakout day, and then everything else is pretty good structure with a tagging up type of thing happening. If we fall to the downside, the 200 SMA should act as support on the first touch, on the way back down through it. That is right around 325 right about now. 325.80. So keep that area in mind if we see a pullback off of this level. If we see the breakout, again, we're targeting this all the way up here, $1.50 in intraday levels that form during the day in between. So Tesla, very similar, just been charging straight up in the upwards direction over the course of the last couple of weeks. We got the breakout into pretty much all-time high territories. So now 413, is our new all-time high. We can mark that one in as resistance. Pretty much from here, we're playing $1.50 into anything higher than that. If we see any sort of pullbacks, let's break out the Fibonacci's for this one, just because we don't really have too much in terms of what's been going on. If we let's gauge the move from here to here. So I would expect, see the 50% is actually a previous resistance, so that's cool to see. Any sort of pullback into that should be a great support to be a buyer at. And then anything at the 38.2, you can see that acted as resistance here and then support the next day. So this level does look like it has some merit, and that's at 381.09. So keep that in mind. Let's get rid of that just so it's not so bright on our face. And yeah, that's going to cover Tesla. Alibaba has been grinding up nicely. You can see that the days of range expansion like this one here are quite nice, and then it consolidates and slowly dribbles higher. Haven't really had one of those since, but you can see that we do have an inverted hammer here right at resistance, which would lead me to believe that we are due for some sort of pullback to happen here. Sellers are starting to step in right at this 211 resistance level. So seeing a pullback off of this, I would look again for the fibs to see what we sort of have here in terms of the move. So the 38.2 sort of lines up here at 204.61. That is a potential area to keep in mind, sort of almost at the highs of this at 203.25. If we see any sort of pullback, that would certainly be a higher low from our low here, and we do have a higher high. As long as we continue to maintain that, we will be in the uptrend, and BABA does look good. Again, this is the overall breakout from the symmetrical triangle, so it's no surprise to see that price is really getting going now that it's sort of getting out of this tight range that it was in. You can see consolidation, then boom, the big move happens, and I think that there's still plenty of room for it to go. We're sort of at all-time highs, so there's no real resistance overhead. We are going to be playing $1.50 into the blue sky territories. So I thought Facebook was going to fall out of its rising wedge and just sort of dribble lower into the end of the new year, but that obviously didn't happen. We do have a glaring gap in the chart, which is right here, that remains below. So poor structure there. If the market sort of falls apart, then that might be a good target for Facebook to go to. You can see we are seeing a bit of resistance, but also support right back at our trend line. So that's very cool to see it now that we're back in the range. Maybe it just tightens into the end of the year and we see a breakout one way or another come 2020. So again, I would just play it inside this range. We do have a hammer here. It looks like the bulls are really stepping up, trying to keep prices propped up, but we do have strong resistance. You can see it's gotten knocked down every single time it's gotten up there. So keep an eye out if it does get back up there and we see the breakout again. So after zooming out, you can see that our next point of resistance is here, which we're sort of almost at. That's at 208.33, and then the all-time high is way higher up there at 218.09. So a breakout over the resistance here could put us up there, but then a breakdown out of this sort of ascending or rising wedge could put us back down to our 198.61 level. Nvidia, again, just a monster. It's been breaking out of its symmetrical triangle. You can see that we're almost straight up here. It does look like it's time for some consolidation. Again, we have a gap below, which could be a potential target on any sort of pullback that happens early on in the week. This inverted hammer here was super deceiving. We thought it was going to pull back off of that, but instead, as the market charged higher, it just sort of followed and continued in the upwards direction. So again, I think it is getting a little ahead of itself. A consolidation period, either sideways or downward, is definitely needed. I think that price could fill the gap. That gap happens at 236, actually, the whole dollar there. So very interesting. Should act as a nice support on the first touch, maybe a nice intraday bounce there, opportunity. Anything lower than 223.04, and we're sort of violating our uptrend. We really want to see that be maintained. Anything lower, and again, we have the potential for head and shoulders to form, where shoulder 1, head, and then shoulder 2 if we fall down below this, and then retest it from the bottom side. So something on the longer term horizon to keep in mind, but again, I think we sort of need to consolidate if there is going to be any sort of move higher again. Microsoft, nice indecision doji here on Friday. You can see that we have a small gap below that remains unfilled, so partial gap fill could be a potential target if the market pulls back on Monday. Based on this candle, it's sort of indecisive. You can see a huge volume surge there. Buyers and sellers could not decide who is in control. So I wouldn't be surprised to see price go sideways for a bit while we sort of figure that out, go through the holiday season, a little bit of chop. I would probably stay away from this one or just play intraday levels that form. I don't have too much confidence in this indecision that's been going on, so I'd expect it to go sideways, if not slightly down, fill the gap maybe, or slightly up and sort of dribble higher with the market. So I know that sounds like, hey, you didn't really give me anything, but again, I would probably stay away just because of all the indecision here. I'm not too clear. Obviously, the trend is up, but I don't really have too much faith in this candle that printed on Friday. Alrighty, so Amazon continues to maintain itself in the bullish channel. You can see that we are slightly in the middle, right around 50%, but we're pulling back off of it. So some resistance in this area. We didn't quite make it all the way up to 1812, so we'll see if we do get there on Monday, or if we pull back and continue to pull back into the 50 SMA, that could be a potential intraday bounce there. Anything down into our trend line down here, and we do want to see a first reaction bounce, and then if we test it one more time, within a very similar time frame, then I would expect it to sort of give. all these touches just mean that there are a lot of pressure here. There's a lot of pressure. Obviously people are buying. As soon as that breaks, a lot of people are watching that. Could cause a nice flush to the downside, in which case, a break at this point, I would expect a flush down to 1707. Anything lower than that, and we're looking at 1672. That's quite a ways away, though, at this point. I suspect we finish strong with the holiday season, sort of just carrying it forward, and then we'll sort of figure out what happens, as will we with most of these stocks, in the new year when the big money comes back. If we see a move upwards, we're looking at resistance overhead at 1812, 1824, 1833, all these prices that have rejected in the past. Also, our 200 SMA is in there, so a lot of resistance overhead. If we make it up through it, though, we do have our resistance trend line way up here that we could possibly contend with. Alrighty, that's going to wrap up this week's episode of the Weekly Watch List. If you enjoyed the video or learned something, then leave it a thumbs up and let me know if you've got any questions down below in the comments section. As always, subscribe for more of this content. If you're interested in receiving 5 to 10 swing trade ideas completely free every Sunday, then go ahead, first link in the description, sign up there. I'll see you on Instagram and in the Discord chat. As always, wishing you a happy holidays and a green trading week.